Not every stock in your portfolio is built the same. Some stocks have high dividends, some stocks have high growth, but at the end of the day, everybody has an opinion on the stocks that are in their portfolio. That is why, in this video, I'm going to share my opinion on the stocks I currently own by ranking them in a tier list. That being said, I like all of the stocks in my portfolio, which makes sense. There is a reason I decided to buy them. So these rankings are going to be scaled against other stocks in my portfolio, but not against every stock in the market. Also, this video is a little less serious than my other videos, so although I will give my fully honest opinion on the stocks, take the rankings with a tiny grain of salt. Anyways, enjoy the video. Before we start this video, make sure to like and subscribe if you're new to the channel because I will be posting dividend stock videos just like this one every few days. Okay, so as you can see, here is the tier list, and here are all the stocks at the bottom. Now, I'm going to be ranking these stocks from worst to best, starting with worst, and as you can see, the tiers go from S tier to E tier, but that being said, I do not think I'm going to be putting any of these stocks in E tier or D tier, because at that point, why would I even own them? But anyways, let's get right into the rankings. I think the stock in my portfolio that I would rank the worst is Main Street Capital Corp, ticker MAIN, and I'm going to put this in C tier. Now, the reason I'm putting it in C tier is not because the stock is bad, but it's because it doesn't really fit my portfolio's needs. I have a long time frame with this portfolio, and I should be chasing lower yield, higher aggression stocks, but Main Street does not fit this. The real reason I'm invested in Main Street is not because I need this dividend income, but it's because I simply love dividends. That being said, I also understand that I don't need these dividends right now, and a high yield stock is probably going to underperform some of the other stocks in my portfolio. However, I'm okay with this because seeing the dividends come in every month and the stock compound is definitely very motivating, and some of the biggest challenges with the stock portfolio is the mental challenges. And having a high yield monthly paying stock like Main makes it a lot easier for me. However, if I had to remove one stock out of my portfolio, it would be Main Street. If you are a bit older though and do need the dividend income, unlike me, I could totally see the stock being easily B tier or maybe even A tier depending on your portfolio's needs. Also, in terms of BDCs, they're definitely A or S tier. They are definitely very high up there and probably one of the safest BDCs you can buy into. Okay, so next up on this list, we're going to be going to B tier, and I think the first stock I'm going to put in B tier is the Coca-Cola Company, ticker KO. Now, if you watch all the videos on my channel, you will know that based on my last portfolio update video, I do not own any shares of Coca-Cola. That being said, since that video, I decided to rebuy some shares, but I won't be saying how much because I'll disclose that in my next update video. That being said, the reason I'm putting in B tier is actually a similar reason to why I put Main Street in C tier. The truth is although the Coca-Cola Company does have growth prospects and is a super great company, it is a dividend play at the end of the day. They're currently yielding around 3.5%, which is really good historically, and because they are a dividend king with 61 years of consecutive growth, this dividend is not only looking like it's going to grow, but it also looks very safe as well, which is great for the portfolio. Now, you might be asking yourself, why did I rebuy into this stock if I'm going to be putting it at B tier? But that's because prices right now are stupid cheap. Coca-Cola is currently trading in the $52 range, and that's the cheapest I have ever seen it since I started my investing journey, and honestly, that number is just too hard to pass up on. I think the market is overreacting with some of the bad news surrounding Coca-Cola stock, and long term, this stock should be a very, very healthy play. There's a reason it is one of Warren Buffett's favorite stocks. Also, Coca-Cola's brand loyalty and brand portfolio is super impressive, and I know I've talked about this in a ton of different videos, but honestly, this is a great company, and they always trade at a very much a premium price, but right now it seems to definitely be cheaper than usual, which is why I picked up on some new shares, and it's why I'm going to be putting this stock in the B tier. Now, the other stock I'm putting in the B tier is not actually a stock, it is an ETF. It is the Vanguard Total Index Fund, also known as VTI. Now, the fact that I'm putting it in B tier is kind of interesting because if you watch my portfolio update videos, you will know that VTI is my biggest position. However, I think B tier is fair for this ETF. This ETF is a benchmark ETF. It is the entire stock market. So the whole goal of this ETF is to not outperform, it's just to perform in line. For that reason, it's kind of hard to say it's an A or S tier pick because it is literally the average. That being said though, average in the stock market definitely is not a bad thing. You are losing a ton of the risk when you buy an ETF this big, which is totally a big upside. Also, the performance of this ETF is actually very impressive, so even though it is less risky than some alternatives, the growth is still there. It also pays a pretty sizable dividend of 1.5%, which is totally not that bad when you think about how many big tech stocks are in the ETF. Overall, when you buy VTI, you're getting a low expense ratio, pretty good growth, a good dividend and low risk, but honestly, I just can't put it in A or S tier because it is market average, and the whole point of my portfolio is to try to beat the market. So putting in A and S tier just doesn't really make a whole lot of sense. So that being said, very clearly, I think the rest of these 6 stocks are market beating, or at least are market beating in their specific sector. Speaking of market beating their specific sector, we're going to be moving on to the A tier now, and we're going to be starting with JP Morgan, ticker JPM. Now, everyone is familiar with JP Morgan. They are the largest bank in the United States, and they are probably the best financial stock that is a bank that I think you can buy right now. The truth is, when compared to other similarly large banks, JP Morgan is simply in a class of its own. They have a good dividend, good growth history, good leadership, good resilience, and a huge market share when compared to even some of the biggest banks like Bank of America and Wells Fargo. Overall, JP Morgan is one of the safest plays you can make in the bank industry, and there's a reason that even during this year's financial scares, they haven't taken that much of a beat like the other bank stocks. Is because so many people have faith in this bank. Though this faith isn't just random, this bank has earned this faith that it's getting from consumers because of its long history. Part of this also stems from its good leadership under Jamie Dimon, who is the CEO of JP Morgan. Jamie Dimon has led this company through thick and thin, notably the 2008 financial crisis, and he's still there today, which is stupid impressive and basically unheard of in the banking world. Overall, as long as Jamie Dimon continues to steer the JP Morgan ship, I think it's in pretty good hands, and it also pays a pretty respectable dividend and has pretty good growth, and I think it is the best bank you can buy. And even though VTI may outpace it, I think in terms of banks, it definitely belongs in the A tier, which is why I've decided to put it there. Now, the next stock in the A tier I'm going to put there might be a bit of a surprise, but it's actually Apple, ticker AAPL. Now, there are a few reasons I'm putting Apple in the A tier and not the S tier, but one of the reasons I want to talk about is that the company is already stupidly massive. The company, by market cap, is the biggest in the world, and it's been here for quite some time. Because it's worth so much already, it's hard to see how much Apple can do to keep generating new revenue. This is very clear with their new iPhone 15 launch, as it kind of seems like they might be running out of ideas at least a little bit. However, I'm still willing to put Apple in the A tier because of a few reasons. One of the reasons is that it pays a dividend, and although it is a very small dividend with a mediocre growth rate, it's still a dividend for a huge tech stock like this, which is definitely appreciated. The second reason is that even though I keep saying Apple is the biggest company, it might be hard for them to grow, people have already been saying this for years and years and years, and the company has continued to beat expectations. This company is super crafty and comes up with new ways to generate profits that people just don't see coming, and I think that's one of the best parts about Apple. For example, a lot of people think of Apple as just a hardware company, but a lot of their revenue has been coming in from software as well. Their Apple ecosystem is probably the best in the entire world, and there's a reason that consumers love it so much. This Apple ecosystem, which includes stuff like Apple Music and the App Store, is basically a money printer for them because people who use iPhones don't really have that many other options for stuff like that. For example, if you're going to be downloading an app on your iPhone, you have to use the App Store, and if that app costs money, Apple is going to take a percentage of that as well. The thing is though, is Apple did not create that app. They spent $0 making that app, and yet they're still receiving some of the benefit for it. This is why even though Apple is the biggest by market cap and seems very large already, they might still have a little bit of room to grow. In addition, like I mentioned earlier, they do pay a dividend, and it is increasing, and even though it's growing at a slower rate than you may expect, a dividend is always appreciated. This dividend, combined with their growth, has historically made Apple one of the best stocks in the entire market, and people have been doubting this stock for nearly a decade now, saying it's too big, but honestly, they might still be saying that now, and 10 years in the future, we might be thinking, wow, how wrong were they? That's why even though I'm slightly skeptical of Apple's future, I still have a good chunk of it in my portfolio because I honestly think they are one of the best run companies out there, and it's kind of hard to doubt them. The last stock in the A tier is United Health Group, ticker UNH, who is the leader in the healthcare sector in the United States. United Health Group is similar to JP Morgan, but instead of the financial world, it's in the healthcare world. Like JP Morgan, they have the biggest market share in their sector and are a giant that has so much good going for it. United Healthcare over the last few years has proven that they are a juggernaut and are able to drive profits to the moon. This is not really a surprise though, as everyone knows that healthcare in the United States is stupid expensive, and someone is going to be profiting off of that, and a lot of it ends up being United Health Group. In addition, UNH also pays a pretty good dividend, which is sitting at around 1.5% right now, which is definitely not too bad, as it is in line with market average, despite the fact that the company has above average growth. This stock is a growth machine, and it's already proven that lately, as this stock has reached almost $525, which is way higher than my cost basis. Overall though, even though it's up a good amount since I bought it, this is a long-term position, and I think it's one that will continue to grow and continue to grow its dividend at a very quick rate, which is great for shareholders. I think every portfolio should have some exposure to healthcare, and if you're going to choose one stock to do that, United Health Group is probably going to be the one for you. Now, getting into the S tier, as you can see, the bottom three stocks are all in the S tier, so it's not really a surprise. So I'm just going to drag all three of them into the S tier right now. So the last three stocks in the S tier are Broadcom, ticker AVGO, Visa, ticker V, and Microsoft, ticker MSFT. But let's start with Broadcom. Broadcom is my favorite stock in my entire portfolio for many different reasons. The biggest reason though, and one you simply can't ignore, is that it is my best performing stock. This stock, since I bought it, is up around 45%, which when you're considering I bought it literally this year is insane. Broadcom is a chip manufacturer and they are super profitable and have some high profile chip deals with companies such as Apple. This allows them to get a very good and consistent revenue stream in, which is solid for the company. The other reason the stock has done so well this year, outside of securing a deal renewal with Apple though, is because of the AI craze. Chip stocks this year have done fantastically, obviously spearheaded by Nvidia. This is because a lot of people think that AI will be the future and that there will be a ton of profits regarding AI and that chips will be the thing to power this. Unlike Nvidia though, that has a PE ratio of 111, Broadcom has a PE ratio that is similar to Pepsi. Not only this, but Broadcom also pays a dividend that is more than market average, which is just ridiculous to think about. This stock obviously has above average growth and above average dividend, which is something you just do not find very often. Not only that though, but the dividend growth rate for the 10-year is 37%, which is just ridiculous, and even the last 3 years have an average of around 12.5%, which is still just fantastic. Overall, even though Broadcom is up 45% since I bought it, it still looks like it's at a okay value right now, and I wouldn't mind adding shares at current prices, even though I'm probably not going to do that. If I had to, it wouldn't be that bad. This stock is great for dividend investors, and it's also good for growth investors. It's one of those rare stocks that is able to do both in one, and I think it is a great stock for any portfolio, especially if you were able to get in before it skyrocketed earlier this year. Now, the second stock that is in the S tier is Visa, ticker V. Now, Visa does not need any introductions. They are one of the biggest financial companies in the world, obviously specializing in credit cards. Visa has some fantastic growth in both their market cap, but also in their dividend, which makes them a super great stock. It is true that their starting yield is definitely a bit lower, but their 10-year dividend growth CAGR is almost 19%, and their 3-year dividend growth CAGR is 15%, showing it is pretty consistently ridiculously high. The reason Visa is able to get away with these lucrative dividend hikes is because the company is simply so profitable. The company has a huge net profit margin at around 50%, and it's because they really don't need to do that much. Visa is a credit card company, meaning they don't have anything physical to manufacture, meaning their costs are super low. Visa is a services company, and they are able to get great transaction fees on basically everything they do. Visa is oddly similar to Apple stock in this way, as it is a great growth stock with a lower dividend yield that makes a ton of their money off stuff that they aren't making themselves. However, I do think Visa is better poised than Apple stock going into the future because their dividend growth rates are just so much better. Although I think JP Morgan is the best bank, I do think Visa is the best credit card, and pairing them both up in one portfolio is definitely not a bad idea. Now, the last stock in this portfolio is Microsoft, ticker MSFT. Microsoft, again, like Visa, does not need an introduction. They are one of the biggest companies and most recognizable in the entire world. They sell a variety of things from services to software to hardware to what is now becoming a more AI-oriented company. AI hype and investment around this company has driven shares higher this year by a ton. This means that they are sitting at a pretty expensive valuation with their PE well into the 30s. That is why I think buying right now may be a little bit risky, but if you were able to buy Microsoft stock at a fair price, this is one of the best companies you can possibly buy into. Their growth is fantastic, and their dividend growth is great as well, with it averaging around 10%, with the 10-year CAGR being 11.45 and the most recent increase this year being 9.7%. If Microsoft's large investment into AI works out for them and pays off in the way they think it will, Microsoft could end up being the biggest company in the world at some point during my lifetime. Honestly, I looked through Microsoft's portfolio of stuff they own, from stuff like Xbox and LinkedIn, but honestly, it is super impressive, and it is clear to see that this company is a good pathway to increasing revenue even more and distributing it to shareholders. This stock is definitely expensive and is trading at a pretty high premium right now, so if it does drop, I will be making sure to pick up more shares, and I suggest you do the same because this company is not going anywhere and should help make you and me a bit richer. Anyways guys, this video wasn't as serious as some of my other videos, I'm definitely aware of that. Ranking stocks is definitely hard to do because there's just so many different things you can rank them on, such as growth and dividend and current evaluation. It gets a bit ridiculous to just give them a letter and just say that's that. That being said though, this video was pretty fun to make. I definitely enjoyed ranking some of my stocks, and I hope that for people who are looking to buy some of the shares that I own, you get a bit more insight into this video and some bite-sized reviews because they were pretty short. Anyways guys, if you liked this video, make sure to like and subscribe. We're nearing on 600 subscribers, which is great. My current goal is 1,000 and we're doing a great job at getting there. Thank you to everyone who has liked the recent videos, commented, or subscribed. Every button you press just makes my life a little bit better, so thank you all for that. You guys make this a very, very fun hobby for me. Anyways guys, I will see you in the next video. Goodbye.